Hi everyone, welcome back to my YouTube channel. This is Raz, and in this video, we will continue our discussion on the allowable deductions, particularly depreciation. So we have discussed already what are those itemized deductions. Also, we have enumerated what are those 10 items considered as itemized deductions. These are the expenses, interest, taxes, losses, bad debts, depreciation, depletion, charitable contributions, research and development, and pension and trust. So we have already discussed the first 5 items, so we will now going to discuss what is depreciation. So if you're ready, let's start. We will first define what is a depreciation. Depreciation is the systematic allocation of the depreciable amount of an asset over its useful life. So as we know, when we purchase or acquire assets, that acquisition could not be somehow entirely deductible in full because these disbursements are considered to be capital expenditures, and we know capital expenditures are capitalized and depreciated or amortized over its useful life. For example, when we purchase machineries or equipment or vehicle, or when we construct buildings or leasehold improvements. So these disbursements, these expenditures are capitalized and depreciated over its useful life. In depreciating an asset, we use several methods to make it simpler and to make it consistent with our tax code or even accounting standards. Also, depreciation is the decrease of the value of any property used in the taxpayer's business, trade, or the practice of profession. So always remember, depreciation in other items of deduction against the gross income must be connected with the taxpayer's trade, business, or practice of profession. So there are few requisites when claiming depreciation as an itemized deduction against our gross income. And these are: first, the property subject to depreciation is used in the taxpayer's trade, business, or practice of profession. And the allowance for depreciation must be sustained by the person who owns or who has the capital investment in the property. Again, any taxpayer can claim depreciation provided that this property is his property. The allowance for depreciation must be reasonable. So the systematic way of allocating the expenditures from the asset must be consistent with the methods allowed by our tax code to be used for the depreciation of the property. The allowance for depreciation should not exceed the cost of the property. And finally, the schedule of the allowance must be attached to the return. So it is required that when you claim for depreciation in your income tax return as a deduction from a gross income, we should attach a schedule or a table on how we allocate the depreciation of an asset. Okay? So here are the following depreciation methods as allowed by our tax code. So the following methods may be used in allocating the cost of the property. Number 1, straight line method. Number 2, declining balance method. Number 3, sum of the year's digit method or the SYD method. And of course, any other method which may be prescribed by the Secretary of Finance upon recommendation of the Commissioner. So in this video, we will discuss these 3 methods in detail. We will illustrate how are these methods used for depreciation. So let's have first the straight line method. This is the most common depreciation method used in taxation. Actually, this is the default or the universal method being used by any taxpayer, whether individual or corporate taxpayer. Straight line is the easiest and simplest way to allocate the property's cost over its useful life. Under this method, the cost of the property is reduced by the salvage value at the end of its useful life when the salvage value is available, and then divided by the useful life and usually expressed in years. So our formula under this method is the depreciation is equal to the cost of the property less the salvage value over the useful life. For example, RB Pawn Shop brought 3 computer sets with a total cost of 30,000 pesos each for the use in its business. The computers were estimated to be useful for 5 years. At the end of the 5-year period, the computers may be sold for a salvage value of 2,000 pesos each. So we are asked to compute the depreciation using the straight line method. So we are given that RB Pawn Shop brought 3 computer sets. Each set costs him 30,000 pesos, and this set will be useful for 5 years. And then each set could be salvaged after 5 years for 2,000 pesos each. So our solution would be the depreciation is equal to cost of the property less the salvage value over its useful life. So we are given 3 units, so that's 3 times 30,000 each unit minus 2,000 times 3 units over 5 years. So this will become 30,000 times 3, that is 90,000 pesos, and then 2,000 times 3, that is 6,000 pesos. So we will get 84,000 pesos divided by 5 years. And the depreciation per year would be 16,800 pesos. Okay, so that's it. That's how you compute depreciation under straight line method. So I will show you the depreciation table with the corresponding balances after the end of each year. The depreciation schedule would look like this. So we have here the column for the years, the depreciation, and the balance. So for the 0 year or the initial year, our balance is 90,000 pesos. Then after the first year, we will record a depreciation of 16,800. So our balance after the end of the first year would be 73,200, and so on. So at the end of the 5th year, we will have the balance of the property, which is 6,000 pesos, which is equivalent to the estimated salvage value. The taxpayer, RB Pawn Shop, can decide whether to sell this property or to maintain this property in its balance sheet. So when it decided to sell the property to another person, he would record any loss or gain on that sale. Okay, so we have already discussed how to tax ordinary gains and ordinary losses arising from the sale of ordinary assets. Remember? So that will apply in case the taxpayer would sell the property after 5 years. Okay? Here, we also have the declining balance method. So we are done with the first method. We will go to the second method, which is the declining balance method. This method is applicable when the property is essentially used in its earlier years. So under declining balance method, this is anchored in a principle that some properties will be used more when they are in their first initial years or earlier years. So the usage of the property in its early years are heavier than its later years. So the formula will be for the rate. This is the formula in computing the rate. So the rate is computed as 1 minus n root of residual value divided by the cost. So the n here represents the useful years or the number of life that the property would be useful. So let's have again another example. RB Pawn Shop brought 3 computer sets with a total cost of 30,000 pesos each for the use in its business. The computers were estimated to be useful for 5 years. At the end of the 5-year period, the computers may be sold for a salvage value of 2,000 pesos. We are asked to compute the depreciation using the declining balance method. So our solution would include to solve first for the rate, and that is 1 minus n root of the residual value divided by the cost. So we have 1 minus the fifth root of the 6,000 pesos divided by 90,000 pesos. So we'll first divide the 6,000 by 9,000. After that, we will get the fifth root of that and then deduct that from 1. So the rate would be 41.8189%. Okay, so I prefer to use 4 digits after decimal point for more accuracy. Okay, so after this, using the depreciation rate of 41.8189%, we would get the following schedule. So we will just multiply 90,000 by 41.8189% to get the depreciation for the first year. So that would become 90,000 times 41.8189%. That is 37,637.01. And then we will deduct this depreciation from the 90,000 balance. So we would get 52,362.99 pesos. So after this, we will again multiply this one, the new balance, by 41.8189% in the second year until such time that we will reach the fifth year, which again, that is 10,312.65 times 41.8189%, that is 4,312.65. So we will get the balance of 6,000 pesos. Okay, so also we have here the third method, the sum of the years digit or SYD method. So under this method, this is almost similar or the same as the declining balance method in that depreciation per year gradually decreases. So it's almost the same with the declining balance method. The depreciation in the first, second years are higher than the later years. However, in this sum of the years digit, instead of using a rate, which is computed more complex, we will use a fraction using the years over the summation of the years of the property, hence years digit. Okay? So, however, the main difference of this method from the declining balance method is that it allocates the depreciation based on the sum of the years. Okay? So, the formula would be the sum of the years is equal to life times, close and open parenthesis, life plus 1 divided by 2. And then after we get the sum of the years, we will divide a fraction of that property in 5 years. So we'll have again the same example. RB Pawn Shop brought 3 computer sets with a total cost of 30,000 pesos each for the use in its business. The computers were estimated to be useful for 5 years. At the end of the 5-year period, computers may be sold for a salvage value of 2,000 pesos. So again, we're asked to compute the depreciation using the SYD method. So our solution would first involve the computation of the sum of the years, which is computed as sum of the years equal to life times, close the open parenthesis, we have life plus 1 divided by 2. So the life is 5 years, and then so that's 5 times 5 plus 1 over 2. So this becomes 15. So that is 6 times 5 is equal to 30 divided by 2. We have sum of the years 15. So after that, we will allocate the cost of the property by multiplying 5 over 15, 4 over 15, and so on. So I will show you the depreciation schedule. So after we have computed the sum of the years, we would get the following schedule for depreciation for 5 years. So again, we are using, instead of the rate under declining balance method, we are using the fraction. So for the first year, that is 5 over 15. That's 5 years over 15, the sum of the years. And then for the second year, we have 4 over 15 until we reach 1 over 15 in the fifth year. So that is 90,000 pesos times 5 over 15. So our depreciation for the first year would be 28,000 pesos. So we will deduct this from 90,000. So that is 62,000 pesos. Again, we will multiply this new balance with the fraction. So that is 62,000 pesos times 4 over 15. So we will get 22,400. So we will deduct this again from the existing balance. So we will get the new balance of 39,600, and so on until we reach the 5th year, which after that we will get the final balance at the end of the 5th year, which is 6,000 pesos. So if you're going to compare the straight line, declining method, the sum of the years digit method, actually the straight line is the easiest, right? You'll just divide the costs after deducting salvage value by its useful life. But we know some properties are really used heavier during the earlier years compared to the later years. So hence, the declining method and the sum of the years digit method are also valid compared to the straight line method. And between SYD and declining balance method, SYD is simpler because we will just use the fraction of the sum of the years, right? So that's it. Those are the 3 methods that are allowed to compute the depreciation of the taxpayer's property that are used in their trade, business, or practice of profession. However, there are also some taxpayers or businesses which have special rules on depreciation. So we have here the special rules on properties used in petroleum operations. So petroleum operation means the exploration, production, storage, transport, sale, or disposal of petroleum. So these are the businesses or taxpayers engaged into exploration and production of petroleum. Okay? So for properties directly related to production, the following rules shall apply. So the taxpayer could use straight line or declining balance method. Okay? Also, the useful life to be used in either of the above. So whether you are using straight line or declining balance method, the useful life to be used in either of those should be the property's useful life or 10 years, whichever is shorter. Okay? So for example, if you are a taxpayer engaged in petroleum operations, so you have actually the option to choose whether straight line or declining balance method for all your properties directly used in the production. You must notify the Commissioner of Internal Revenue on what method is going to be used and how many years could these properties be used in the operation. So for example, the estimated life of these properties which are directly used in the production is, let's say, 15 years, then we will use 10 years. Again, whichever is shorter. So if the estimated life is 9 years, we will use 9 years. If the estimated life is 20 years, then we will use 10 years. Again, maximum only of 10 years. However, for properties not directly related to the production, the following rules shall apply. So only straight line method is used and the useful life is always presumed to be 5 years. Okay? For those, again, for those properties directly used in petroleum operations, the taxpayer has the option to choose whether straight line or declining balance method, and the useful life will be the estimated useful life or 10 years, whichever is shorter. But for properties not directly used in operation, the only method to be used is straight line and the useful years is 5 years. That's it. So we'll have an example. ABC Company is engaged in petroleum operations. During 2020, it has the following properties subject for depreciation. So we have here properties directly used and their useful life and the cost and the salvage value. So we have machine 1 with the useful life of 8 years, cost of 2 million and salvage value of 50,000 pesos. We also have machine 2 which has a useful life of 12 years and a cost of 5 million pesos and a salvage value of 250,000 pesos. We are also given properties not directly used in the operation with their useful lives and then cost and salvage value. So we have machine 3, for the useful life of 6 years and the cost of 1 million pesos and a salvage value of 100,000 pesos. We also have machine 4 with a cost of 800,000 pesos and a salvage value of 60,000 pesos. So ABC elects the straight line method, which is duly approved by the CIR. Again, for those properties directly used in the operation, we can only use the useful life or 10 years, whichever is shorter. So here, between 8 and 10 years, we will use 8 years. But for machine 2, between 12 and 10, we will use the 10 years. Okay? For those machines not directly used in the operation, we will always assume the 5 years useful life instead of this given 6 years and 7 years. Okay? So our solution would be, for those directly used in the operation, we have machine 1 and machine 2. We will just divide the cost less salvage value by 8, the lower. So we'll have a depreciation per year of 243,750 pesos. And for machine 2, which is useful for 12 years, we will use 10 years. So we have depreciation of 475,000 pesos. For those not directly used in the production, we have machine 3 and machine 4. Again, we will always assume that the useful life is 5 years. So that is 1 million minus 100,000 divided by 5 and 800 minus 60 divided by 5. So we will get a total depreciation of 1,046,750 pesos. So that's it. That is the rules for properties used in the production. So aside from the special rules on properties used for petroleum operations, we also have here special rules on properties used in mining operations. So for properties used in mining operations, the following rules shall apply. If the expected life of the property is 10 years or less, use the normal rate of depreciation, which means depreciate it over the actual useful life. So for those properties used in mining operations, again used in mining operations, if the expected life is 10 years or lower than that, then we will depreciate that property using the normal rate, which means we will just depreciate that property using its actual useful life. Okay? However, if the expected life is more than 10 years, we will depreciate the property over any number between 5 and the expected life. So again, for example, if the property used in mining has the estimated useful life of 8 years, then we will depreciate that property for 8 years because it's not more than 10. But if the useful life of that property is 16 years, so we will depreciate that property for any number between 5 and 16. So we can use 5 years, we can use 6 years, we can use 7, 8, 9, 10, 11, or 12, or even 15, or even 16, provided that the property's useful life is more than 10 years. So you will go to the Commissioner of Internal Revenue and then you will notify him and say, the useful life of this property is 15 years. And we intend to depreciate this property for 12 years, or 7 years, or 5 years, or 15 years. Okay? So any number between 5 and 15, or the useful life. So again, the mining contractor must notify the CAR at the beginning of the depreciation period. However, in the case of non-resident aliens engaged in trade or business, so the NRA ATB, or a resident foreign corporation, depreciation shall be allowed only if the property is located in the Philippines. And allowance for obsolescence may be deducted in addition to the reasonable allowance for the exhaustion, wear, and tear. So aside from the depreciation amount computed using the straight line or the SYD or the declining balance method, we can also deduct any obsolescence. For example, the depreciation is only 100 and then the property is actually obsolete, let's say the entire property is obsolete, meaning it can't be used anymore, any unrecognized amount in the depreciation can be deducted against our gross income. Okay? For example, in our illustration about RB pawn shops, computer sets, we said that there is salvage value of 6,000 pesos. However, if such property is totally obsolete after 5 years, meaning there is no value at all, then we can deduct also the salvage value that we have maintained in the balance of that property. Okay, we can deduct that 6,000 against our gross income if the property turns out to be obsolete and cannot be used anymore. Okay? So, illustration. ABC company is engaged in mining operation. During the year 2020, it has the following properties subject for depreciation. We have useful life and cost and salvage value. So, you have machine 1, machine 2, and machine 3. So, machine 1 has a useful life of 8 years and the cost is 2 million and the salvage value is 50,000 pesos. Machine 2 has a useful life of 12 years and machine 3 has a useful life of 7 years. ABC elects the Straightline method, which is duly approved by the CR. So before we jump into the solution, let us first recall that for those properties used in mining operation, if the useful life is 10 years or below, we will depreciate the property over its useful life. So meaning for machine 1 and machine 3, we will use the useful life of 8 years and 7 years. Their normal useful life. Okay? Because the expected life is not more than 10 years. While for machine 2, since the useful life exceeds 10 years, the taxpayer here, ABC company, can select any number between 5 and 12. So he can use 5 years to depreciate machine 2. He can use 7 years or 10 years or 11 years or 12 years. So he can use any number between 5 and 12. So for machine 2, ABC company can choose to depreciate the property over 5 or 12 years. So our solutions would be, so we'll assume that machine 2 is depreciated for 10 years as approved by the CR. So let's assume that machine 2 is depreciated only for 10 years. Okay? So our depreciation would be, for machine 1, we have 243,750. And for machine 2, that is 475,000. And then for machine 3, we have 105,714. So this is the depreciation for those properties used in mining operation. Okay? So it's actually simple. Okay? That's it. Aside from petroleum operations and mining operations, we also have special rules on properties constructed by PEIs or private educational institutions. Private educational institutions may, at their option, capitalize and depreciate the cost of the construction of properties throughout its useful life, or deduct the entire cost outright. So, for those properties, buildings, equipment, or any properties constructed by private educational institutions, private universities, those for-profit schools, for-profit universities, they can choose whether to capitalize and depreciate that cost over the useful life of the property, like what we have computed using the straight line, declining balance method, or SYD, or it can also deduct the entire cost as a deduction from their gross income. Okay? So that's actually very convenient for the PEIs. Why convenient? Because, for example, if they have a lot of income in this year and they will construct this amount one time, so they can choose to deduct this entire cost against their gross income one time. Okay? That's easier. That's actually easier because in the next year they will not depreciate the property anymore. Although in the balance sheet, for accounting purposes, of course, this properties are capitalized, right? And depreciated. But for taxation purposes, it can be deducted outright. So we have here an example. ABC University, a private educational institution, constructed a new school building in the year 2019 for a total cost of 5 million pesos. The building has an estimated useful life of 20 years. The accounting books of ABC University recorded this as an asset, meaning in the accounting books, using the accounting standards, the university recorded this cost as an asset, meaning it capitalized the 5 million and depreciate the 5 million, and that is in their accounting books. However, for income taxation purposes, how would this be treated? Again, ABC University has the option to capitalize or to deduct this entire amount, 5 million, outright as an expense against its gross income. That's it. Okay? So we have here limitation on depreciation. Under Revenue Regulation 2012, the BR imposed a limit on the deductibility of depreciation allowance, maintenance expenses, and input VAT on motor vehicles as follows. So, the purchase of vehicle must be substantiated with official receipts and other records indicating the price, the motor vehicle identification number, the chassis number, and etc. Okay? The taxpayer has to prove the direct connection of the motor vehicle to the business. If you purchase a car, then that should be purchased in connection to your business. And only one vehicle for land transport is allowed for the use of an official or employee with a value not exceeding 2.4 million pesos. So, for example, if you are the employer, you are the taxpayer, and you give motor vehicle to your manager, let's say for his convenience, you can only assign one vehicle for that employee, provided that the value of such property or vehicle is not exceeding 2.4 million pesos. So, no depreciation shall be allowed for yachts, helicopters, airplanes, land vehicles over 2.4 million unless the vehicle is used in the company's transport operations or lease of transport equipment. So, the limitations, as I have said, shall apply to the land vehicles purchased on October 17, 2012 and onwards. The non-deductible expenses shall also cover all related expenses and input taxes, including but not limited to repairs and maintenance, oil, lubricants, gasoline, spare parts, tires, and accessories, premiums paid for insurance, and registration fees. So, for example, if you are the taxpayer and you have this manager and you want to give him a vehicle, not as French benefit, but you want him to use the vehicle so he would be comfortable to transport from his home to the office, you still own that vehicle. And the value of that vehicle, let's say, given to the manager is, let's say, 3 million. So you can only claim 2.4 million. Okay, it cannot exceed 2.4 million. Or let's say you've given two vehicles to that manager, one costing 1 million and the other costing 1 million. Again, you can only claim one vehicle for that particular employee. Any repairs, any depreciation for the other vehicle given to him cannot be considered as deduction from your gross income. Okay, that's it. In the case of non-depreciable vehicles, will be sold at a loss. For example, you decided to sell the other vehicle given to your manager. Any loss shall likewise not be allowed as deduction from gross income. Any expenses incurred for the other vehicle, the lubricants, gasoline, spare parts, repairs, and etc. could also not be deducted from your gross income. And for example, you sell the other vehicle, any losses sustained could also not be deducted from your gross income. Okay? But any gains arising from that sale could be added to your gross income, actually subject to normal tax. Okay? So that's it. I hope you learned a lot from this video, and thank you so much for watching. If you like this video, give me a thumbs up, and if you are new to this channel, please subscribe. and click that notification bell so you will be notified whenever I will upload new videos. Thank you so much for watching. Bye-bye.